Friday. I am multicasting. YouTube, Facebook, Instagram. Hey, how everybody doing? I hope you didn't miss me. I hope you did not miss me. So YouTube, if I'm looking up there, I'm looking at those people on Instagram. Instagram, if I'm looking down here, I'm looking on Facebook and YouTube. With that said, whole 34 seconds just talking. Boop, 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 boop. Anyway, happy Financial Focus Friday, guys. Happy Financial Focus Friday. I'm your girl, Elaine Forbes Daisley, aka The Elaine Forbes. Oh, what happened? AKA The Elaine Forbes. Let's get it right. Your accountant, certified QuickBook Pro advisor, and your go-to source for confident bookkeeping with over 40 years accounting experience. Yes, it's your girl. Now, you all know it's social media, and Elaine likes to be social. So make sure you say, hey, Elaine. Hey, Elaine. And drop your name in the comment because you know I like to give a shout out. And tell me where you're coming in from. Let me know that you're here. If you're a business owner, put a B. If you're a non-for-profit, put NP. Listen, welcome everyone. Welcome everyone. Thank you for all those who are joining today. As always, you know, I love, 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 love it, love it, love it. We're just making sure that everybody knows that I'm live, right? If you know that I'm live and you know somebody that you think needs to know that I'm live, send this live to them. Send this live to them. I see you guys. Hello, welcome. Thank you for all those who are coming in. I'm watching. Say hello. Say shout out to Elaine. Who's that? Oh my goodness. Yes, I get a nice compliment over here. Nice here. Thank you for coming in. While you're dropping your LOs, while you're saying hey and telling me where you're from, as always, tell me where you're coming in from. Oh, yeah, I see all those people coming in. Where are you all coming in from? Say hello. Hello, 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 hello. I love it, love it, love it, love it, love it. Seeing Pakistan. Oh, my. Awesome, awesome. We have people. Is that Cebu? Mexico. Hello to. How do you say hello in Mexico? No, I don't even remember. Hola, hola. Love from Pakistan. Cebu. Okay, that's awesome. All the people coming in. Thank you, thank you, thank you. All right, let's get to it. While you're dropping in your where you're from and your LOs in the comment, let me ask you something. I think I did something wrong. This is what happened. I think I did something wrong. Let me ask you something. How many of you reconcile your books? United States is in the house every single month. How many of you reconcile your books every single month? I'm waiting for the answer. I am waiting because I think I messed up, but I'm asking. No, I'm also working, right? Every single day. Awesome, 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 awesome. I see that. Now, here's a question nobody asks. As per school, okay. Here's a question nobody asks. After you reconcile, do you actually review your financial statements? And before we get into that, I have an announcement to make. For a long time, my content has been focused on business owners. My content has been focused on business owner. But today, I'm going to invite all the bookkeepers to come to the front. If you're a bookkeeper, come to the front. I'm shifting my focus today for people who are in doing their books every single day. Because I noticed somebody said that they reconcile every single day. So you might be a bookkeeper. Are you a bookkeeper? You're serving your clients. And sometimes second guessing themselves when something does not look right. So if you're a bookkeeper, you're serving client, and sometimes you're second guessing yourself because something doesn't look right. That is who I am talking to now. If you're a bookkeeper and sometimes you look at the books and you said, I'm not sure if this is right, you're who I'm talking to. Bookkeeper, this is your time. Welcome. Welcome home. And if you know a bookkeeper who needs to hear this, share this live. And business owner, you can take a seat too. You can take a seat because you might learn something from what we're going to talk about today. Reconciliation. We're talking about reconciliation, right? We're talking about reconciliation. Reconciled does not always mean correct. I am Elaine. Hey, so if you're asking, for those who are just joining me, if you're just catching the broadcast, I'm your girl Elaine Forbes Daisley, aka the Elaine Forbes. And if you're in the broadcast, say hey. So we are talking today about reconciliation, and we're talking to bookkeepers. Business owner, take a seat too, because you might learn a thing or two. What I've found over the last 40 years of doing accounting, yes, I've been doing accounting for 40 years. So that is what is showing in my hair for those who are loving my hair and those who are not loving my hair. I've been doing accounting for 40 years. Reconcile does not always mean correct. And today I'm going to show you exactly what I mean. Stay with me. Stay right. Take a seat and we're ready to go. This is going to change how you look at every set of books. Every set of books you ever touch again. And even the business owner, it is going to change how you think about your financial records. This week, I actually released a free guide called the 10 Financial Statement Red Flag Every Bookkeeper Should Catch Before the CPA. What I've found, especially when I'm looking at some people's books, these are things that usually goes unnoticed. Unnoticed. Yes, for 40 years. Yes. And the reason has been, response has been incredible. So I released this free guide on it And the response has been incredible. Hello over here on Instagram. I am Lenita. Welcome. Thank you so much for joining. So today I want to walk you through some of the most important red flags in that guide. I'm going to walk you through them live so you can see exactly what to look for. So I'm talking, if you're a bookkeeper, then this is for you. If you're a business owner, this might help you too. This will help you too. If you want the full guide, drop guide in the comment right now, and I will drop the link. I'll make sure the link is below the video or above the video, below the video or above the video. And you'd be able to get a copy of the guide. We're talking about 10 financial statement red flag every bookkeeper should catch before the CPA. But if you're a business owner, you can catch these red flags, these things, before you send your books to the CPA. Number one, negative accounts receivable. Number one is negative accounts receivable. The first red flag I see all the time is a negative accounts receivable balance. And let me share this with you because some people might say, I don't have accounts receivable. Even if you don't have accounts receivable, I have looked at books who are cash basis and they have a negative accounts receivable balance. Don't ask me how that happened. I don't know. Anyway, I can tell you how to fix it. Now think about that. If your books have a negative accounts receivable balance, how can that be? Like I said, I don't know. It cannot unless something was recorded incorrectly. Like I just said, I've seen cash basis accounts with negative accounts receivable balance, which mean something was recorded incorrectly. This usually happens when a payment was applied to the wrong invoice. If you're sending invoice, a credit was entered incorrectly, or transaction was duplicated. So three of the major reasons why you end up with an negative accounts receivable balance. One, payment was applied to the wrong invoice. Two, a credit was entered incorrectly. And three, transaction was duplicated. And negative accounts receivable balance will not show up on your reconciliation. When you're reconciling your bank account, a negative accounts receivable will not show up there. But it absolutely shows up when the CPA review your balance sheet. When your CPA or even the person that is preparing your tax or your accountant review your balance sheet, then that negative accounts receivable show up. Has any bookkeeper seen this before? Drop a comment if you have. Drop a comment if you have. Let's now talk about red flag number two. Red flag number two. And this one is very tricky. In my mind, this one is very tricky. Loan recorded as income. Let's say you got a loan in your business. That's money coming in, but that's not income. That is not income. And here is what happened. This one shocked business owners every time. So if you are a business owner here and you got a loan, how did you record it in your accounting records? How did you record it in QuickBooks? How did you record the loan that you receive in QuickBooks? I would love the answer. Put it in the chat. I see loans recorded as income too many times. Too many times. When business owner gets a loan, it gets deposited in the bank and often get categorized as revenue. What that means is profit and loss is inflated. Taxes could be calculated on a money that was never earned. The loan liability never show up on your balance sheet. That is what that means. That's a serious problem at tax time. So now you're paying taxes on money that you didn't earn. It's actually a loan. And again, the reconciliation was perfect. Your reconciliation was perfect. The bank balance matches, but the financial statements are completely wrong. Yes. If your loan is recorded as income and not as a liability, your financial statement is wrong. Your reconciliation was correct? You did perfect with reconciling, but your financial statement is wrong because that is one of the things that was not recorded correctly. Red flag number 3. Red flag number 3. Payroll not clearing. Payroll liabilities. I'm sorry. Payroll liabilities not clearing. What does that mean? What does that even mean? Your company pays payroll, and the taxes that goes with your payroll become a liability to you, and that has to be paid over to the government. When we look at your book and we see all these payroll liabilities, they were never cleared. What is showing in your book is that you owe the government. Hello, somebody. Do you want to always show that you owe the government? When you owe them, you show that you owe them, right? But you don't want to show a liability when you do not have a liability. Payroll liability has a deadline to be paid, which means most of the time when we're seeing it in your books, it was already paid, but it is showing as unpaid. I frequently pay. Okay, so let's talk about the payroll liability and what it does. It creates two problems because payroll is run every 2 weeks, every week, every month, and it is accumulated on your balance sheet. When it is paid, it's paid out of your bank account. If it's not applied to that balance sheet item, it's showing as still owing. So your balance sheet is showing a liability that really does not exist. That's one problem. And two, or even worse, it showed that tax was never actually paid, even though it was paid. Either way, the CPA is going to ask you a question. And guess what? Most CPA charge you for those questions. Yes, you gotta pay for those questions. The more questions they ask, the more things they have to figure out, the more it's costing you. And that's something that you could fix before. That's red flag number 3. Red flag number 4. Red flag number 4. Uncategorized transaction. Let's say you get this book, you got your clients send you their books, their QuickBooks, and you open their QuickBooks. It has a category that says uncategorized income and uncategorized account. These accounts should actually be 0. If you have transactions sitting in there, your financial statements are not accurate. If you have transactions sitting in your uncategorized income and your uncategorized expense, your financial statements are not accurate. The bank account reconcile perfectly because the uncategorized transaction was categorized to uncategorized, and that is also incomplete. Every financial transaction has what I call a bucket. It came from somewhere and it went somewhere. If you have a transaction that is in uncategorized, which means you don't remember, you don't know where it come from, or you don't know where it went. That is telling me that something is wrong. Money don't come from just anywhere. Money don't just go anywhere. So before any sets of books goes to the CPA, before you file taxes, before you do any of these things, these account must be 0 every single time. Another account that I've been seeing lately, and this account, I know this account during my early years of doing account, suspense account. Suspense account. I remember in my early years of doing accounting, I learned that this account must always be 0. Suspense account, if you're watching in UK or in Europe, I do think they still use suspense account. If you are using suspense account, it must be 0. It must be 0 every single time. Let's move on to red flag number 5. Red flag number 5. And this is a big one for small business owners. Owners draw recorded incorrectly. Did you hear me? Owners draw recorded incorrectly. I'm making sure to look at all 3 cameras at this time. I am talking to the bookkeepers, come to the front. But business owners, take a seat right beside the bookkeepers. Owners draw recorded incorrectly. This affects business owners mostly. This one is a common error that I see, especially when I am reviewing small business books. Owner's draw should be recorded in the equity section of the balance sheet. Sometimes or frequently, I see it recorded as expense on the profit and loss or mixed in with payroll. Owner's draw should be recorded in the equity section of the balance sheet. When owners draw record as expenses, the profit looks lower than it actually is. Tax calculation are affected. The equity section of the balance sheet makes no sense. These are the kinds of error that cost business owner thousands of dollars at tax time if the owner's draw is recorded as an expense. Now I've shared 5 of the red flag in my guide. I'm going to pause. I have 40 years in accounting. I have a master's in accounting. I have a bachelor's in accounting. Somebody's asking what qualified me to talk about this. My question is, if I have 40 years in accounting, doing accounting, working with small business, working in various account industry, I've always been I don't like to brag, but yes, I have 40 years in accounting. I've been using QuickBooks for over 27 years. Actually, 29 years. I've been using QuickBooks for 29 years. I have a master's in accounting. I have a bachelor's in accounting. What is so unbelievable? Anyway, we just paused for a moment a while ago to just talk about my credential and why I can talk about this. Because I'm not even going to say that. Let's get back to it. I want to hear the bookkeepers in the house. If the bookkeepers are in the house, raise your hand. Come to the front. I want to hear you right now. In the comment, tell me, which one of these red flag have you seen in your own books or your client's book? Business owner, which one of these that I just mentioned, if you open your books, have you seen? Drop number 1, 2, 3, 4, or 5. Which one of these have you seen in your own books as a business owner or in your client's book? Let's run through each of them real quick. Number 1, negative accounts receivable. Number 2, loan recorded as income. Number 3, payroll liabilities not clearing. Number 4, uncategorized transaction. Number 5, owner's draw recorded in the wrong place. Which one of these have you seen in your client's book or in your book if you're a business owner? If you've seen all 5 of them, drop a 5. Number 4, uncategorized channel. Yes. It is. I go live about 4 p.m. I was a little late today, so we're close to 5 o'clock. Yes, number 4. That is the most common red flag. I know, that is the most common red flag. Here is what I want you to take away from today. If you're a bookkeeper, before I say that, I've had business owner that reaches out to me and said, I need to get my book reconciled. I need to get my bank account reconciled. But here's what I want you to take away from today. Reconciliation is one step in the bookkeeping process. One. It confirms that the bank balance matches QuickBooks. It does not confirm that transactions are correctly or categorized correctly. It does not confirm that the balance sheet makes sense. It does not confirm your books are tax ready. And it definitely does not confirm that your financial statement tells an accurate story. Reviewing financial statement analyzes bank balance sheet, understanding the story behind the numbers. That is what makes your book truly accurate. And that is separate. That's what separates a data entry bookkeeper from a confident accounting professional. And that is exactly what I teach. The confident framework. I want you to leave with my confident books formula. It's a 5-step framework I use to review every single set of books. If you were a business owner and you were to reach out to me, this is the framework that I would use to review your books. Crawl. Crawl. Cash. Is your cash position accurate and reconcile? R. It's C-R-A-L-P. Is your cash position accurate and reconcile? Receivable and payables. Do accounts receivable and accounts payable balance make sense? Assets. Are all asset accounts supported and corrected? Liabilities and equities. Do loans, payroll liability, and equity account reflect reality? And P, profitability and tax readiness. Does the profit and loss tell the right story? If you notice in the 5 red flag that I spoke to one of those categories. 1, we spoke about the cash, the bank. 2, we talk about the account receivables and payables, the liabilities. 3, we talk about the asset. Your bank account is an asset. 4, 5, we talk about the profitability and the tax readiness. When you work through every set of books using this framework, you will never miss a red flag again. And clients will trust you completely. If you're a bookkeeper, use this framework. You will never miss a red flag. I have put together a free guide that walks you through 10 financial statement red flag every bookkeeper should catch before the CPA. It is based on my confident books formula, 40 years of real accounting experience. And I'll drop the link. I don't know if I can drop it in here right now. I'm going to drop the link below the video. You can download it, use it, share it with every bookkeeper you know. I will drop the link below the video. Because the more bookkeepers who review financial statement correctly, the better it is for every small business owner that you serve. And if you're a small business owner and just hear this, Ask your bookkeeper. Ask them. Something I always say. Ask your bookkeeper. If you hear me say something, ask your bookkeeper, ask your accountant. Because they might know it already. Make sure they're applying. That's the thing you do, is ensure that they're applying. Before I go, two things. Number one, if you got value today, drop a heart right now so I know this was helpful. So if you found value, drop me a heart. Number two, follow me here, Instagram. Follow me on Instagram. Follow me on Facebook. And you can also follow me on LinkedIn. And YouTube. Follow me on YouTube. So you never miss a Financial Focus Friday. We go live every Friday at 4 p.m. Eastern Standard Time. I'm Elaine Forbes Daisley, aka the Elaine Forbes, your accountant, certified QuickBooks Pro advisor, your partner in confident bookkeeping. Have a beautiful weekend, everybody. And remember, reconciled is not enough. Confident books is the standard. Remember, reconcile is not enough. Confident book is the standard. Confident book is the standard. See you guys next Friday. Bye. Bye. Ta-ta.